General Secretary Sri Madhavi Mukhopadhyay had directed me to put before you the Finance Bill 2024, presented by the Honorable Finance Minister Nirmala Sitharaman in relation to the direct tax proposals affecting the provisions of Income Tax Act and the chargeability of tax thereto in the hands of various persons. We are all assembled here. Customarily, as we every year do, post presentation of budget to discuss these proposals. The Finance Minister has announced that there will be a complete overhaul in the structure of the Income Tax Act within 6 months. On 1st of February 2025, new budget will be presented by the Honorable Finance Minister, and I suppose along with that finance bill, she will introduce a complete overhaul the structure of the Income Tax Act, because when they propose such law or such changes in the money bill, then they don't get much resistance, and these are passed with the money bill. And as you all know, in view of the pressure on the state to collect as much tax as possible, they are always looking for new avenues, whether in the field of capital receipts or in non-tax revenue receipts, to bring it within the fold of chargeability under the Income Tax Act. Even in this budget, the Honorable Finance Minister has tried to preach from the pocket of the taxpayers substantial amount of revenue by increasing the tax rates on long-term capital gain and short-term capital gain. As also the purchase of its own shares by the companies. As against 115QA, under which the company used to be taxed at the rate of 20%. And the shareholders were given complete exemption. Such amounts are to be treated as deemed dividend, and a new provision has been inserted in 222H, whereupon such amount shall be complete amount, total amount will be treated as deemed dividend. And in section 57 amendment has been made not to allow any deduction in relation to such receipt. Section 48 has been amended to allow the cost incurred in relation to such security to be adjusted against the future sale of the remaining security at a future date against the capital gain. So there will be a total liability in the hands of the taxpayer, and on the top of that, 10% TDS is to be deducted on the amount which will be paid by the company. So therefore, they are retaining tax, they are charging the full amount of tax, and thus they are creating new avenues for taxing. As I told you, both in the terms of long-term capital gain, is also short-term capital gain, and thereupon treating that same as dividend. Another far-reaching change which has been brought about in this budget is to not allow indexation. Indexation which was permitted from 2001 on the market level is no more permissible. Straight away the receipt by way of capital gain shall be charged to tax at the rate of 12.5%. And thus a huge liability will be fastened in respect of all capital instruments, be it long-term capital, loan property or security or otherwise. The period of holding now in respect of long-term capital gain is now universally made 24 months and plus, and in the case of short-term capital gain, 1 year and less. 1 year and less. So, short-term capital gain 20%, and on that there is surcharge also. So, the 15% limit is there. So, short-term will go to 23%. And long-term 12.5% plus 15% surcharge. This will make more than 14%. So, the charging of tax on such regions by giving you a small fillip in the marginal taxpayers of about 10,000 rupees only in the tax slab. That is the benefit of 10,000 only you are given in the tax slab. It is that a huge amount is going to be realized in this case. Now, there are many other potential changes which are referred to, and as a consequence of which changes, the several sections have been amended, like for the long-term capital gain, rate of tax has been increased from 10% to 12.5%. That is from 23rd July itself. And section being amended is section 112, 112A, 115 AE, 115 AC, 115 AAC, 115 AD, and 115 E. All these sections are being amended to bring it in tune to treat the long-term period is also charging of tax. So, we are, and likewise for short term, section 111A is being amended. That is again from 23rd July itself. In the case of the foreign company, they want the foreign direct investment to come. So, the rate of tax has been slashed from 40% to 35%. So, we help the Indian entrepreneur, helps the foreign entrepreneur. Security transaction tax also has been raised from 0.1% to 0.02%. So, that has been doubled. It has told you section 222 has been amended, section 42A has been amended.
Point take for 0.08.
अच्छा ये जीरो हाँ sorry 0.1 to 0.0
Reduce
ठीक है एक करते हमारे कुछ वासे जाए ना it makes no difference to us. Now there are see charitable institutions and charitable trusts has become a slapping horse. For last 5 years, continuously some changes or others are being made. There were provisions under section 10, that is 10.2C. There were 10.2C, AD, C, and all the provisions were there independent of section 11. Now, one point charitable institution will all be covered by section 12A and therefore this allowing a junction under section 1023C 3A, 3ED, 46B, 1023C, all items waste they have all brought within the provisions of section 12A and 12AB. Wherever the period of junction has got lapsed, where they continue to enjoy benefit under section 1023C till it lapses, then thereafter new registration will be done under section 12A. So this amendment has come. Likewise for 80G, grant of 80G and 12A also, the period after making the application has also been revised. We are giving 6 month registration or approval was to be granted. Now, a 3 months quarter has been earmarked, and on that 6 month time is permitted. So, time period has been extended for both for the purpose of 12A and 18. A section 12AC has been brought in. The trust having similar object and duly registered under section 12AB can merge. And such a merger is a charitable institution if it is not for the similar object affects provision of section 115EB, 115E and 115EF. It shall not apply if 3 conditions are satisfied. That is, the other trust of the institution is same as similar object. The other trust of the institution registered under 12AA, 12AB or approved under section 1023C. And the said merger fulfills the condition as may be prescribed. The government will prescribe conditions for such merger. So those prescribed conditions are also have to be fulfilled. If these 3 conditions are fulfilled, then 112AC says that the junctions will be continue to be enjoyed. But post merger, without invoking section 115ED, 115E, 115EF. Now there is amendment in section 28 also. If you know that there was a Supreme Court judgment in the case of Chennai property. In the judgment of the Chennai property, the Supreme Court had held if your object clause of the company is of buying property, obtaining property on rent or lease, and giving it on rent, that is treated as a business of the company. And so such a income can be computed under section 28. Now an amendment has been brought by inserting explanation 3, which is from 1st April 2025, that such a income is treated only as income from house property and cannot be assessed as business income under section 28. Section 36, highway has been also amended. The limit of the employer contribution towards pension fund scheme under section 80 CCD was 10%. It has now been enhanced to 14%. So this is effective from 1st April 2025. The likewise amendment has been made in section 80 CCD also to give the corresponding benefit. Section 37 has also been amended. There are, the explanation 3 to section 37. We say that any expenditure of the nature which is against the public policy or prohibited by law will not be allowed as deduction in spite of the fact such expenditure is laid out and expended only and exclusively for the purpose of business. But now such charges are contested by the parties in the court, and the plea was that since we are contesting it because we don't accept the allegation, a huge litigation cost is to be incurred on that account. Now any litigation or settlement thereto has also been prohibited from allowance, and therefore this explanation has been inserted to prohibit such deductions. So this is the amendment in section 37. Section 40 also has been amended. in relation to the partnership part. So far, the partners' remuneration computed was as under. First 3 lakhs of the book profit, or in the case of loss, 1.5 lakh or 90% of book profit used to be paid to the partners, and that was permission. Now, on the first 6 lakh of the book profit, 3 lakh or 90% is being permitted, and the balance book profit 60% is report is being permitted. But now 10% TDS has been deducted, which has been a new section which has been inserted. Now section 43B, that is in the respect of public financial institution and public company. Now the provision apply only to the public financial institution, not public company. It's a mandatory. 43B, that is presumptive taxation in the case of shipping company. So shipping company has been given a rebate, 20% tax shall be charged, and in respect of the cruise and shipping covered under this section. So for promoting the cruise business, for the non-resident also amendment has been brought, and in section 44B new section is inserted, where a presumptive taxation has been prescribed for the shipping cruise. 44 BBC, same that 20% amount has been brought in. Then section 1015B, a new clause has been inserted. It exempts taxability on the leave rental paid by the company, which owes for presumptive regime under section 44 BBC. So whatever payment these companies will be making to the parent company by way of lease rental, then that shall not be charged to tax, for which this section 1015B has been inserted. Now in capital gain buyback, I have told you section 46A up to 39/2024 executes capital gain buyback now will be charged to tax under section 22F. So then I have also told that 115QA is not applicable with effect from 1st October 2024. And section 1034A not applicable with effect from 1st October 2024. Section 47. Now, what so far any person who make gift, and section 47(3) used to treat such gift as not a transfer. Question used to arise that it is not a transfer, then the company is transferring by way of gift from one company to another company cannot be treated under section 56 to 10, a chargeable to tax. So now they have brought an amendment that section 47(3) will apply only in the case of individual or actual. So all companies, all other persons have been excluded from this category. Now section 48, benefit of indexation which was provided has been taken away. Then section 50AA is market linked debentures. This with effect from 23rd July 2024, transfer reduction maturity of a specified mutual fund acquired on after 1st April 2023 or market linked debenture, unlisted bond or unlisted debenture on or 23rd of July 2000 shall be taxable as total return. So this amendment has been brought, and a specified mutual fund with effect from 1st April 2026. A mutual fund by whatever name called, which invests more than 65% of the total proceeds in debt and money market instrument, or a fund which invests 65% or more of its total proceeds in units of a fund referred to in clause A, debt and money market instrument, shall include securities and whatever name called by regulated by the same. So then section 58 has been brought in, and this will be dealt with at par, one year holding, and shall be charged to capital gain, short term and long term based on that. Now 55, reading of adjusted cost of improvement and cost of acquisition. There has been a new provision has been inserted from 1st April 2018. When these 1038 provisions were amended to bring the long-term capital gain to tax at the rate of 10%. Then by certain deeming provisions, if I say the fair market value, that is total market price of both shares on that particular date, that was the January, 31st day of January, shall be treated to be the cost of that security. But there were certain securities which were private security. Later on, it became public security. It became quoted. So when it was private, there was no security transaction tax was paid on that. But when it became public and sold, then security transaction tax was paid. Now the question arises: what is the cost of acquisition? Because there was no market value on that day. Then all the provisions of permitting indexation with reference to the original cost, the grandfather treatment shall be given in order to arrive at the cost. So this section 55 be adjusted and be prescribed. There was a lacuna because it was argued that since there is no provision to compute the cost of acquisition, so therefore it cannot be brought to tax at all. So now this lacuna has been covered. Section 56 now, 56 to 7b, it has been abolished. That's the engine tax. Because the fair market value of the money brought in the company, we used to be differential amount which we charge to tax. It has been done. Then reduction under the income from other sources. As I told you, that section 56 to 8, by way of shares, no deduction shall be applicable. That is section 57 has been amended. And in respect of annual pension, deduction is only 20% rate is from 15,000 to 25,000. So that is now 92 CA, 2A and 2B. This has been extended to be treated as specified domestic transaction. 94B limitation on inventory deduction in certain cases. Provision of this section shall apply is not very relevant for you. I am reading it. Now 132B. Now what happens? 132B is a specific section in the Income Tax Act when seized assets shall be released to you after you have explained those assets or after you have met all the liability. In that, the liability used to be related to income tax, wealth tax, gift tax. Now they have inserted a provision that any liability under the black money law also shall be included, and after taking care of that only any balance sheet is given, then this shall be given. Section 139 has been amended to bring in by an order under section 119 to be, if you have been permitted to file a return, then that provision has been inserted in section 139. No, 139 AA quoting of Aadhaar number, it shall not apply. Then 144 provision is not more applicable. Now, previous provisions, there are lots of previous provisions which have been brought in. I will not dwell on that because you can go through that. Those are not very any to be explained to you the percentage wise issue. Now, lower deduction certificate in certain cases you can obtain on the purchase of goods under 194Q because the full amount of deduction is made, the whole of your capital is made in a way. So that profit is not there. So 197 has been allowed to be applied to that. Certificate of collection of lower rate has been thus provided. Section 1 tax deducted income received. This all the money which flows into India in the form of income. People used to offer net amount income accruing and arising in India. But they used to take credit under section 19 of the taxes which has been paid there. Now it has been said such taxes retained outside and taken credit later on, self-credited income in that taxes. Naturally, because after that from those income only deduction is made, so that was a lacuna which has been taken care of.
Now, this 201 is implied scheme, we are not much considering. Now, Vibhag se Vishwas scheme has been brought in again because now the tendency of the these habits are almost 6 lakh. Money hardly disposals have taken place. The purpose behind reporting of such disposal is evident. In January 2020, they brought Vibhag se Vishwas scheme. They collected substantial tax. Now they have come back. But they said Vibhag se Vishwas will remain the same except for the fact those who did not avail Vibhag se Vishwas in 2020 January, if that carryover is being settled now, then 10% more you have to pay. So this is the Vibhag se Vishwas scheme. Now there are major elements which I like to address you. That is your optimum assessment and research assessment. Now, see, two things which are very much runs like a football in the income tax act. You know, in 1993, they introduced block assessment system. Under that scheme, the two set of assessments were made. One was purely undisclosed income, another by regular assessment. Section 158B subclause E defined undisclosed income, and that undisclosed income needs to be assessed with the block system. Initially, it was for a period of 6 years. 98, it was amended to bring 10 years in. 2003, it was abolished. In 2003, they came with a set of provisions 153A, 153B, 153C. This 153A, 153B, 153C continued till March 2021. In March 2021, they come with the plea that is for being part of 148%. In 2021 to 2024 now, within 3 years, they are fed up with this 148, saying that there is no consistency in that, there is no integrated investigation. 1 year is this year, another is yet another year, so it will keep running for several years. So there is no integrated investigation. So therefore, they will need to change it again. That is why this chapter 14b has been brought back, and this block assessment scheme has come. In this block assessment scheme, they have 158 BC had 3 exceptions provided herein. If you are in this 6 years period, those years for which the assessment has been concluded, those years where returns has been filed but assessment has not been concluded, and those years where return is due, books of accounts are maintained, entries are there in the books of accounts. In these 3 cases, the total income shall be computed under the block assessment. Each income shall be explained. The balance income shall be block assessment, and these block assessment shall be the total income computed each year, but ultimate total income computed shall be charged to tax at the rate of 60%. And there will not be any interest charged in section 234 ABC. There will not be any penalty under section 270. And returning except dates, then you don't have to enter any further time. I think this is a welcome provision. This settlement commission, they have done away with. Now at least by bringing in this block assessment scheme, they are giving you immunity from penalty, prosecution, charging of interest. If you consider the 6 years return and you compute interest for each year thereon, then 60% rate of tax will come. So 8% there is no surcharge provided on the 60%. Later on, if they provide any surcharge, that's a different thing altogether. So this new block assessment scheme they have brought. They have also brought section 158(d). If any books of account, document, money, bullion, jewelry, valuable article or thing belonging to any other person is found, then again they will assessing officer will record satisfaction, and after recording satisfaction will hand over such books of accounts and document, money, bullion, etc. to the assessing officer of such other person, who will then start the proceeding by issuing notice under section 158(bc). For the time limit 6 etc. is provided. The time limit of 1 year is provided after the conclusion of such. So within 1 year, such assessments shall have to be framed. There are instances where there are hangover of the past searches before this search happens. Say a search took place 2 years back, and next search took place. Earlier such assessments have not been concluded. Then if the provisions are old provisions, then earlier such assessments shall be concluded, and then these assessments shall be taken up. But however, where 139 returns are pending, then those will await and they will be considered under the block assessment only. So these provisions have been taken. There are provisions like if there are litigation, time taking shall be excluded. There is any other set aside of the matter, then again that matter will be taken care of within the time limit which has been also prescribed separately. So these provisions have been brought in. They welcome provision, but since they say within 6 months they will come out with another new act, we do not know what will be there. Why such something has been brought in now, I do not know. So you see what is in respect of such incident. Now, as I told you, section 148 and 148A also has gone simultaneous changes. Now, such cases are out of the purview of section 148, and therefore all those provisions which were in relation to reopening of the assessment on such cases are now 5 years is the maximum limit for which the reopening can be done. 3 years are the period for reopening from the end of the assessment year, and 2 years further is permitted if the escaped assessment in each of such years is more than 3 lakh. So 5 years limit has been placed. Now under section 148A, the assessing officer is supposed to issue under section 148A1 a notice to you or based on the information which is collected, and will provide a copy of the information to you also, and will give you an opportunity to revert back. And after receiving your response under section 148(2), under section 148(3), you will pass an order where you will either accepting your plea or rejecting your plea, then it will issue notice under section 148. But in section 148, there will be certain informations which will be considered as having emanated, say in the case of survey or under section 135A, with the prior approval of the specified authority, such notices can be issued. Now the section 151 also has been amended, and additional commissioner and joint commissioner has been made the specified authority, as the principal commissioner and chief commissioner, which earlier used to be, or the DI or DG, as they used to be. So these are the changes which has been brought in section 148 also. So these are the major changes which I have discussed. Now let me recompass the amendment which has been brought in. First is the comprehensive review of the income tax act. This will be done within 6 months. 2. Tax exemption regime of charities, as I told you, has been merged. TDS rate on e-commerce operated to be reduced from 1% to 0.1%. Credit and TCS to be given in the TDS to be deducted. Proposes to simplify reopening of reassessment, as I told you. SOP for TDS default. Now this is a good provision where it has been decriminalized. Now these criminal provisions in relation to TDS has been decriminalized. Reassessment of such cases I have explained to you. Short-term capital gain I have explained to you. Long-term capital gain on financial, non-financial gain I have explained to you. Listed financial asset I told you, into 1 year holding, unlisted shall be 2 years holding. Announces Vibhag se Vishwas I have told you. Dispose of backlog of trust and India. Now in the AP, section 251 has been amended, and the CIT appeal and the additional CIT appeal has been given power to set aside the expertise. So now the expertise assessment can be done by the assessing officer. You need to file in the to the tribunal in that. This is additional say thing has been done. Proposal to increase monetary limit filing appeal, yes. Here 60 lakh rupees is now the monetary limit for filing appeal before the tribunal. 2 crore is the monetary limit for filing appeal to the High Court, and 3 crore the monetary limit for filing appeal before the Supreme Court. This has been bolstered. To bolster Indian startup ecosystem, abolish income tax. I told you that section 56 to 7B has been abolished. To a streamlined PPA assessment procedure, not for mature consequence. So I have not discussed about that. Simpler tax regime for foreign shipping company, 20% I told you. That amount the tools. Proposal to reduce corporate tax from foreign companies, 35% to limit 40% I told you. STP and FO increase 0.2% and 0.01%. Proposes to tax income from buyback, I have told you, that section 222 is introduced. Then non-reporting of movable asset up to 20 lakh years. In the black money law, now they say there are many students who go abroad and or people go also open a bank account. Some money is left out. So up to 20 lakh, from that the black money law is to be applied. They say up to 20 lakh rupees, black money law will not apply. There not will be any charges, nor there will be any need for reporting, and there will not be any penalty of that. Then withdrawal of equalizer. Decimal equalizer, there is all the foreign operators who used to sell goods in India. Foreign equalization tax was levied. There was huge resistance from all multinational companies about that, so that has been abolished. Then personal IT rates I have told you is not of much consequence, only 10,000 rupees will be there. So these are the directors' proposals approved by them, which I have given you in nutshell. My friend will explain in detail, and then if you have whatever questions for me, I will.
Thank you, Mr. Escadushian.